What's up guys, Tom here with another video. Today we're talking everything to do with the markets right now, and we're in one of the most exciting times guys, the earnings season. The S&P 500 is at all-time highs. We have of course huge movements coming through here for NASDAQ style stocks, and things look like they're heating up. The question is, with the market so optimistic, will the earnings themselves for Apple, Amazon, Microsoft and others later this week be lackluster? Stay tuned to find out more. So here begins our recap of the markets close 26th of July 2021, and straight away you'll look at this heat map and you'll see the big companies. Energy did well. Amazon started coming through with the goods. That's probably been the most lackluster result orientated run up that we've seen here, and Tesla as well, 2.21%. The earnings is out for Tesla. It looks like they beat expectations. There's a lot to go into and dive into there, but yeah, look, Tesla did all right, and it did have a slight bump after market from what I saw. Other than that, it's really, kind of like a bit of a slowdown here in anticipation of the big cats or the big boys coming out, which is of course going to be the technology sector. As we mentioned, Microsoft, Amazon, Facebook, Apple, just to name a few, are coming out this week, and that's the type of thing that really drives sentiment. So here's the fear and greed index as taken from Twitter people, and the Twitter kind of index, I guess you could say here. And I like to go contrarian versus what most retail traders are doing. You'll notice over here, when everyone got super greedy, the market, which is the blue line here, actually started to decline. So when everyone feels great about the world, I feel a little bit scared. Warren Buffett, be greedy when others are fearful and be fearful when others are greedy, yeah? At this stage, we just hit a 70 number, so this will update and actually go quite a lot higher. I want to see this kind of going 90 plus, and once that happens, usually I start to get a little bit scared in the markets. And one of those reasons why is just when you drive into the data. I talk about actionable data, and you don't want to use it as the absolute thing that you're doing, but you definitely should pay attention to general kind of cycles throughout markets. And one of those cycles is that August and September, specifically September, is relatively weak for the technology sector. I think this is mostly a problem in tech right now. Tech's had a resurgence. Tech's had a massive boom into this earnings season. And once you see earnings come out, often the after result is people just go, okay, I'm going to take some profit now. I'm going to get out of it. And it becomes that slumpy time. So just remember, August and September, they're not as positive as you might think in the stats over a 20-year period. It's often sideways or actually sideways down. And that's something we'll be looking at here on the channel. As we mentioned before, earnings season, my goodness, it doesn't get any bigger than this. This is the week. This is the one. And I can just, like, everything's here in this week. It's so important that it pulls through. Another stat just taken on general market. Now you can ignore the post-election years if you want to here, but just in general, August, September, again, over the last periods have not been fantastic. Something to keep in the back of your mind if we start to see bear signals. Just something to keep there. We're still optimistically bullish here in the market. And again, I've stated it a few times, I believe we're in a multi-year bull run here that, at least in my opinion, goes for quite a few more years. In fact, I wouldn't be surprised if it goes up to 2025, 2026, even a little bit further before having a true crash in it. Will there be corrections that are upwards of 20%? No doubt. However, will there also be, generally fairly bullish movements based on monetary policy, based on what we see right here, right now? Yeah, it seems likely there'll be quite a lot of bullishness. Let's go through and have a look at the markets now from a technical perspective. Dollar index to start with. Nice little sell-off here. Now, this is not what a lot of people want to hear, but dollar index is not exactly going super bullish at this stage. Even though the weekly looks beautiful and the weekly closed high and all of those types of things, it's still messing around here. And that daily didn't quite get a nice closure above it. It had some momentum follow through, but it didn't quite do the right stuff. If the dollar index gets underneath this 20 in this last low, it might actually sell off even further before trying to resume further uptrend. So be careful here in the dollar index. All is weird, I would say, at this stage. If you're looking at the buy zones, 93 plus is a good technical resistance to look for the momentum that should push it to the previous high over here, 93.40. But I'd say if this turns now and gets up above here, it's probably going to look for a new peak and break through this one. It's just the way the market works. If the market comes down like this and then it does find momentum, it usually wants to come through with the goods. Put call ratio coming down here. A few people got scared about this. In many ways, a bit of a false reading here on the PCC from the CBOE. Overall, we want puts to be actually quite low if you're looking for crashes. If you're looking for points when markets tend not to crash, that's actually when there's a huge amount of puts in the market overall, because Wall Street doesn't want to pay out calls and options. Remember, if they're paying them out, 70% is the stat of how many options expire worthless. So you got to remember, Wall Street's not in the game to make money for you guys. They're making money for themselves. Selling the insurance, which is effectively what they're doing with the options, is one of the best money spinners they've got, and they might as well continue to make some cash from that. Let's go over to here to gold. So gold's trading at $17.99. We've got some interesting levels here that we need to close above. You'll notice there's a lot of kind of like bullishness that's coming in through here. We've got a great support that goes through $17.90. We go bearish underneath that while the floodgates open towards the sell side of gold. Gold traditionally actually quite strong over this period in time as a seasonal. So if we do break back above 811 with the closure is the key here, then we should see a resumption hopefully of the uptrend. And at this point, you're looking at that market structure just continuing on. That's a big thing. Dollar index, gold, ones that we watch, but we also watch TLT, which is the 20-year bond. 20-year bond continues to bounce off the daily 20. However, it is weakening here a little bit, and we'll be watching the 20-year bond. If this starts to strengthen again and the market keeps going up as well, I've talked about this as being a precursor. The smart money's in it, and often if this does occur, then the market will actually start to turn around relatively soon. We've also got the 10-year kind of weakening here and having a lot of problems around the daily 200. This is something that we look at from a perspective of the health of the overall idea of inflation. Obviously, 10 years, their expectation is 1.28% for the US dollar. I feel like that's a little bit low, but this is the time that we live in. You know, everyone's talking about inflation over here, and then all of a sudden it's like almost deflation or stagflation is the concept. So we'll look at it, we'll keep following, and I'll inform you if we see anything weird. IWM still stuck in the middle zone, right between this previous supports equals resistance. Nothing to see here. We've got this thing trapped. IWM, again, one of those ones that's heavily exposed to the financial sector, which can be one of the precursors of the rest of the market having problems. At this stage, we just don't see it yet. US 30, new all-time highs. Congratulations, Dow fans. You finally got a new all-time high. Nice bullish close here. You'd want to see it follow on. It really only will with the earnings of Microsoft, the earnings of Apple, and other large ones in the Dow. We have our great trend line, which of course, if it does break below against, is going to be bearish for the market. So we're cautiously optimistic here into earnings, and we hope it can come through. Similar for the NASDAQ. So we go into the QQQ here. It's trying its best to get up to the trend line. If we go over to the daily, you'll notice here's the trend line. Here's that great resistance line that comes through. We've got a new all-time peak into earnings. As Apple traditionally actually underperforms after the earnings result. If you took the last 10, you would notice that Apple doesn't tend to really hold its gain after that point, but you know, maybe it's time for it to really smash it out of the ballpark and do very well. Microsoft, Amazon, others can bring through the NASDAQ, so we'll see whether this can get up to the 370 area and whether it finds resistance on this trend line. We're very close now to the tippity top, some would say. S&P 500 about 2%, I think a little bit over 2% away from the trend line, 2.92% away from the top of the trend line. This is the community one that we've been following for quite some time. And I think the problem right now is not necessarily in the S&P 500. There's plenty of companies not doing that great in the S&P 500. Where the problem lies in the market right now is probably in tech. And I'm a huge bull on tech. I love tech. I think tech is the future. But when the tech moves hard and it goes into a seasonal time of weakness, such as the August-September period, and this could mean that the S&P 500 just kind of does nothing for a bit. Maybe the NASDAQ is the one that really shows the bear signs. Just be careful here. It's cautious optimism at this stage. All signs still bullish into the earnings. And this is the week for it to go longer. Now, we go over to Bitcoin. Now, Bitcoin had a resurgence in it. Then we were live streaming last night. like everyone was talking about US dollar tether. Supposedly, of course, the Doge got involved in it, and that was not so good. It turned out to be an investigation from quite a few years ago, but look, they're clearly looking at regulating, or at least doing something with these stable coins. I think long term, that's a good thing for Bitcoin, a good thing for the cryptocurrencies. You'll notice it's pulling back down here into that 36,000, the daily or the 4-hour 20 kind of area around here. I would like to see a bounce here, little kind of lightning bolt, little double bottom, something like that. If you go over to the FX Evolution Twitter, you'll notice I posted an actual quick image there that was to do with, which I'll go over there now. Here's the image. This was the image to do with Wyckoff, and you'll notice straight away that we have a very similar type of accumulation strategy. Let's say this is the last point support, which it technically should be if this is going to play out. We've got the 6,000 area being a previous point of resistance, which should act as support, roll reversal, and ideally it goes up, tests the 41, maybe sits underneath or sits around that 41 to 42.5 area, creates a sprint, or creates in this case a market structure that looks consolidation, and then hopefully bounces through. That would be the ideal bull case here. And if it gets back under 36, then maybe that was just a rally squeezing out all those short positions and liquidating it. And boy, oh boy, did they liquidate those positions. It was pretty exceptional stuff how much they pushed through. We'll go over here to just a quick thoughts on the week ahead. We, of course, don't have much news for the Tuesday session. Consumer confidence coming out at 10 a.m. ET, so that's the New York time. And then the next day, we have the FOMC statement, FOMC press conference. These are always important at this stage because we have to rely on what the Fed's saying to support the market. And, of course, we don't want talk about tapering. No tapering, guys. We only want great green days. Now, we've got earnings. We've got, of course, everything coming into the FOMC, and it's a time to be optimistic, but also cautious, and we'll continue to cover these markets as much as we can on the channel. Remember to subscribe if you like the content. Come view us 1 hour before the New York Open, and we hope everybody has a great day. Bye for now, guys.